Good evening, all the participants. We have with us CA Rajendra Kumar P, Vice Chairman to the committee. We have three panelists, CA Sankar Narayan V, CA Subham Khaitan, and CA Saurabh Singhal. Today's topic, that is the new financial year, GST perspective. New financial year, which starts from 1st of April, and it also includes the closing of the earlier financial year, because after 1st of April, we do everything about the March filing of GSTR 1 for the month of March, and as well as the filing of GSTR 3. So both type of things, what we should do at the beginning of the year and what we should do at the closing of the year. Both type of things which we are going to discuss today. Good number of questions have been compiled by the committee for the panelists, but I request all the viewers, anything coming to your mind related to the topic. Sometime you wish to ask something which is not related to topic, we are informing you that we are unable to take those top questions which are not related to the topic in the session. Although we will try to answer you through email. So please be relevant and be attentive to the topic. So you can ask the pertinent questions only. So now I'm requesting C. Rajendra Kumar P for opening remark and the welcoming the speakers.
Thank you, esteemed Chairman of the committee, CA Sushil Kumar Goyal ji. Very esteemed speakers who have assembled here from Pan India, CA V. Shankar Narayanan from Chennai, CA Saurabh Singhal, rather Advocate Saurabh Singhal from Delhi, CA Shubham Khaitan from Kolkata. Esteemed members who have joined for this session, and the office represented by CA Smita Mishra, the secretary, Impreet, and their technical support, Ashok, who are there online. In fact, GST, as all of you are aware, is a transaction-based law. And in a transaction-based law, where the tax is based on each and every where the tax is levied on each and every transaction, this transaction-based law makes it extremely important for the business community to ensure that the end and the beginnings are properly captured. Given this scenario, today we have assembled three esteemed faculties from across the country. Our Honorable Chairman has taken this initiative of ensuring that we have a panel discussion on the openings in the GST law as far as the businesses are concerned. Our esteemed Chairman is ensuring that this particular session shall be a panel discussion calling for queries and answering the queries, so that those members who attend reap the benefits. Sir, thank you very much, Chairman, sir, for your initiative and for your futuristic vision. So all the three faculties who are seated here, they are very, very esteemed faculties, expert faculties. They are not new to the country, per se. Everyone who is in GST knows all these three faculties very well. And those who don't know them, they are not in GST. As simple as that, let me put it. They don't practice GST. They have not smelt the law of GST. All these three faculties. Purely, as far as I can say, they don't need any introduction. Each and every faculty has put in years of experience, even though GST is at just about 6 to 7 years now, rather in the 6th year. The faculties have been in connect with the indirect tax laws for quite some time, especially service tax. And people like Saurabh Singhal and have been in the area of central excise for quite some time. The law of GST today, as it stands, has been tweaked many number of times. And we in the GST Indirect Taxes Committee, under the dynamic leadership of CA Sushil Kumar Goyal ji, are leaving no stone unturned to ensure that the latest in this legislation is conveyed to the members. The latest rudimentary thoughts that come out of number of our members are also discussed and debated upon. Towing this line of our chairman, we have assembled this session today. Each and every faculty is an expert. Subham Khaitan has handled numerous sessions, not only in the webinars, but also in the certificate courses. And similar is that for Saurabh Singhal and Shankar Narayan, and each of them have their own niche area. None of us can say that I'm an entire expert in GST. None of us can tell that. Each and every person has his own area of choice, his own area of interest. As we proceed in the coming years in this law, as the new government, as and when it takes shape and it comes to power, and the new budget is going, when it is presented in July, we will certainly see what best the GST committee can do for the purposes of amendments, etc. The chairman has been continuously working, the committee under his leadership has been continuously working in sensitizing not only the members but also the department. We have been conducting numerous training sessions to the government departments, and very recently, under the leadership of our chairman, we entered into a memorandum of understanding with the government of Andhra Pradesh to strengthen, to empower, and to ensure that each and every GST officer of government of Andhra Pradesh is empowered with the new legislation. The officer concerned is able to understand the various rudimentary aspects. So with these brief opening remarks and brief introduction of all our very, very esteemed faculties who basically need no introduction, I hand over the proceedings to our chairman once again. Thank you very much, friends. Let us stay tuned together.
Thank you, sir. Thank you for the kind words, sir.
Thank you, Vice Chairman, sir. Now we can start the panel discussion, and benefit of panel discussion, it doesn't become monotonous, and we get that 360-degree views, because different panelists have different views, and it is advantageous for the persons who is attending the webinar. So straightway I am asking the same questions to all the three panelists, starting with CA Shankar Narayan. What is the most important thing, most important action you suggest one should take care at the beginning of the year?
Good evening, sir. The foremost thing, like in any accountant would do, we should restart the numbering of all the documentations. If the company has a process or the business has a process of year-wise numbering, that is where it is like we tend to miss out on the first day or the second day. To avoid that, what happens is we should ensure that all the documentations, be it the tax invoices, the debit notes, credit notes, delivery challans, the connected transactional documents should be realigned to the new financial year. That will be the first and foremost thing, an action that needs to be taken from a documentation perspective. And there are other compliances which would request us to, or which would require us to take some actions. For instance, a taxpayer who's having lesser than 5 crore turnover might want to opt for quarterly filing scheme. He wishes to do that, maybe they can do it. This is the time. And people who had thought about composition scheme should have exercised that option even before the start of the month of April. And the other compliances like the LUT filing, as well as the filing of GTA, which is come up only from 2022, filing a annexure to tell the department that what am I going to do as a GTA? Am I going to collect GST at the rate of 5% or 12%, or I'm going to be a person under reverse charge? Those options should also be exercised. So these are the key actions that needs to be taken by a business at the start of the financial year.
Thank you, Shankarji. Now I am asking Subham Khaitan.
Sir, I would just like to add here, sir. What Shankara sir said, though it is best to align our invoicing series or a bill of supply series or maybe credit note, debit note series to the new financial year, Although the law says that the numbering or the serial number should be unique to a financial year, which means that if somebody wants to continue, one can continue. If somebody wants to restart with one again, can restart with one again. It is just that sometimes, or more or less most of the time, what we do is we do a 2324 stroke 1, 2324 stroke 2 as an invoice number. So in order to avoid that anomaly, we should do a 2425 maybe. But in case you have a normal serial number like 001, 003 and you want to continue, you can continue, because the law only requires you to be unique to a financial year. But as rightly said by Shankara sir, it is best to have a unique and a new series in the new financial year. Although there is no bar to continue, sir.
Thank you, Saurabh, for clarifying that we have both the options available.
Yes.
We can continue the old number or we can have the new series, but it is advisable to have a new series. That Saurabh and Sankarji both are agreed to this. Shubham, you want to add something here or we can?
Yeah, just one more thing with regard to a few turnover related limits that we need to check, because we need to remember that if, let's say, a person is feeling that he might have a turnover which might exceed the threshold limit, so he might think about taking registration, or in a case where last year's turnover was more than 5 crore rupees in a financial year. So in that case, the e-invoicing applicability also needs to be checked. So a few things which needs to be checked at the year end in terms of the limits that we are crossing has to be taken into account. Anyone who's planning to have a new business, how does he plan to start a new financial year, also is extremely relevant, sir.
ठीक है, वो थर्ड स्पीकर का आ नहीं रहा था इसलिए कॉल किया था. अब आ रहा है.
Good, Shubham. Thank you for adding this. Now I'm asking next question to Shubham. What precaution you suggest for this cash ledger and credit ledger? These two ledgers is maintained for each GSTN, for every taxpayer. How many GSTN they have cash ledger for individually maintained for this. So what type of precaution you suggest we must take care, and what type of reconciliation rather you want to suggest that one should do for this cash ledger and credit ledger?
So in my view, the books of mine should be a mirror of what is happening on the portal. So if my portal is having a particular balance in the cash ledger, credit ledger, liability ledger, that balance should be reflecting in my books as well, the same amount. So normally a liability ledger should have equal balance, because the liability which I'm paying in my returns would be equal to what I'll be disbursing through my 3B. Obviously, there can be liabilities which are there, which occur through demand notices, for which there can be different mechanisms of reporting. But if I exclude the demand notices, my liability ledger ideally at the end of the period should be zero. And I should have generally two ledgers maintained. One is my primary ledger, the other is my secondary ledger. Because my ITC might be going into the primary ledger, but not every ITC which goes into the primary ledger would be taken in my 3B. So I should transfer whatever ITC is taken in my 3B to the secondary ledger. So I know at the end of the year which are the ITC which is yet to be taken. So my secondary ledger, in which all the ITC which is equivalent to 3B is transferred, should be balance of that should be matching with what is there on the portal. So ideally, my credit ledger should be a replica of whatever is there in my secondary ledger in my books of accounts. And accordingly, even for cash ledger, I would suggest that we should not pass a simple entry that we are, let's say, making a payment of tax payable to bank. Ideally, there should be a cash ledger also in my books which should be opened, because my cash ledger might have certain balances which are occurring at the year end which has not yet been paid. So that is part of my asset. So that is not yet tax discharge. So ideally, the cash ledger balance which is there on the portal should also be there. So ideally, I should have all of this reconciled, and all the three ledgers should be matching with each other. That's what my take is on this particular.
Yeah, thank you, Shubham. Sankarji, you want to add something? Basically, what I understood from Shubham, that he is saying whatever ledger these ledgers are, their balance must match with our balance sheet figures. There should not be any reconciliation to this. That must be exactly appearing in our ledger. Whatever reconciliation is required to be done, it has to be done in our books of accounts. But after this reconciliation, the balance should tally with our balance sheet ledger. And one more thing, I definitely need the Saurabh's input also. Whether you want to say this cash ledger balance should be reflected as a cash and bank balances, rather money with the department, because what is your suggestion on this? And definitely we will wish to know where we should reflect this cash ledger, more appropriate place.
So most
Sankarji.
yes, sir. Oh, so sorry, sir.
In my view, it should be part of the balance with the department only, because it is not easy to obtain the cash ledger balance as unless you go through a procedure of refund.
Rather
As a
different.
cash ledger refund. Hence, I wouldn't prefer prescribing or classifying it under the balances with bank. And the other part is, as Shubham rightly said, many do not have the practice of maintaining cash ledger as a ledger in their books of accounts. This becomes very important, especially after the introduction of same PAN across India. The cash balance can be transferred. And with respect to works contractors and the TCS, the e-commerce people who operate through e-commerce operators, the money gets credited to their cash ledger. And from there, they utilize it. Unless they maintain a cash ledger also in their books of accounts, the mapping of it becomes a difficult aspect. And it also has one more element to it, which is books of accounts are expected to be maintained the GST registration wise. Hence, the reconciliation of both cash and credit ledger at the registration level should also be the focus in terms of completion of that year and starting of the next year, sir.
Thank you, sir. Saurav wanted to say
Yes, sir.
something here.
Sir, most certainly, as sir has rightly pointed out, that we need to have this ledger in our books of account because it's a PLA-based system, so we need to have it. One more point I wanted to add is that most of the times we see that suppose for a client or for an assessee, there is a e-way bill check that happens by a check post officer or a mobile squad officer, and they create a liability in our electronic liability register. But at that point in time, what we do is we make payments through DRC03, which is a voluntary payment mechanism. And then officer would take that DRC03 as payment from our side and release our vehicle. Now what happens is that DRC03, that is the voluntary payment made by us, is standing at one end, and my electronic liability ledger, electronic liability ledger will also stand at one end with a liability on it. So now, although there is nothing to be done as an active measure from at our end, because this set off has to be done by the officer, not by us. So we should always request the officer to do this set off. Now, nowadays, especially UPGST officers have learned it and they are doing it. Or else, if we are accepting the liability as a whole of the officer or of the as raised by the officer, we should rather not use DRC03 for payment, but use our electronic liability ledger, go there and pay off the liability there. That sets it off in a better manner, which gives us a better reflection of what is happening in our books of accounts as well as on the GST government portal. So that is one part, that we keep making DRC03 payments, but never ask the officer to set it off with our liabilities.
Chairman, sir, you're on mute. You're on mute.
Sorry. We have advantage of having vice chairman with us. He is also one of the expert in GST. So his views are also welcome, sir. Please.
Sir, no, sir. I just wanted to pitch in here to Shankar Narayanan. Do you say that then this amount which is there in the cash ledger is an advance paid to the department? Is that your view?
Yes, sir. It is like a PLA balance and it is not a tax that is per se gone to the government, sir. Hence,
so which means this money is yours.
Yes.
So when this money is yours, how can it then be treated as an advance to the department?
It is a balance with the department, sir. It is like refund receivable. When we make an entry for refund receivable, when I make the payment of tax, I don't keep it as a liability, meaning I move it from current asset. But I only show it as refund receivable because till the time the procedure happens, I will not be able to receive it. So I keep it as a current asset.
Then in my view, what it should be is that we should say that balances in cash ledger. That should be the entry that should be there in the balance. That's what should come. It should not reflect in cash and bank. Maybe cash and bank balances can be one main heading. Below that, cash balance, balance with so-and-so bank, balance with so-and-so bank, balance in cash ledger. It should come like that.
Or balance
that
with
should be
GST
the reflection.
Authorities. Yes, sir.
Balance with the reflection.
Yes, sir.
No, you cannot say, no. You cannot say GST authorities because
Okay.
it technically is not GST department's money, isn't it?
Oh, I thought it is my balance with them, which I can utilize.
No,
But the
I don't
number-
think so.
Okay.
Is that? I'm not. Shubham, what is your take on this? How do you view this?
So I see that in the income tax returns, for example, in the balance sheet, there is an
No,
option.
don't go to income tax. Please don't go to. Technically, be only on GST. Please don't travel to income tax.
Yeah. So basically, in my view, as a reporting, we should show it as balance with revenue authorities. It is simply a payment that has been made to them, which is in the form of deposit. It is not technically tax paid. It is only a deposit lying with them, which is our money, and it is a balance with them, and we can get it as a refund anytime that we want.
Yes.
If it is not
Without
utilized.
interest.
And more
Without
so,
interest.
I'll just
Without interest.
pitch in there. More so, because now courts have started recognizing our balance in the cash ledger to even waive off our interest liability. So if an assessee takes an argument that, see, my lords, I had this balance in my cash ledger, but there was a delay in filing the return due to certain reasons. So waive off my interest liability, and courts have recognized it that this money is actually lying with the exchequer, and exchequer is really earning interest on this amount. So the time cost of money is really on the exchequer, not on me. So therefore, definitely it is with the revenue authorities, and it is not liquid. I have some cash lying there for 2-3 years.
Thank you, Saurabh. Thank you, Saurabh. But
Thank
the
you.
discussion is going to getting linger on. But why I proposed to be shown as a balance, cash and bank balances, for the reason that government said the money has not received by us, so we will charge interest. So where this money has gone, we don't know. This is as claimed by them, and
The
they
difference between what
continue
the
to charge the
officer would
interest.
pay.
That's why I thought it is a separate bank account they have opened, and who is owner of this bank account? No, don't know. And so that's why I proposed. So let me move to the next question. Saurabh, I'm moving towards the Saurabh, and I am asking Saurabh. GTA things has been touched upon by the Shankar Narayan, but as I understand, it is not so easy to explain. As Shankarji has told that GTA has to opt, but please explain in detail what exactly the GTA should do, and why I am asking this more specifically, for the reason that unless GTA have done its compliance properly, the person who is receiving the services of GTA, they will not able to comply it properly. It might so happen the GTA is opted for something else and the receiver of service is doing something else. So this type of confusion will create litigation in the future. So Saurabh, over to you for this particular area of the discussion.
So very briefly, sir. So basically, first thing is that we must analyze what is a GTO and a GTA. GTA is an agency that is mostly registered under the Carriage of Road Act 2007, and it's an agency which is engaged in the transportation of goods, and it is different from a GTA that is a single truck owner. A single truck owner is not liable to GST. It is only an agency which operates in the business of providing transportation of goods by road and issues a consignment note is the person who is liable to pay GST. Now, as a GTA, sir, so for example, DRCL, for example, Oak Logistics, for example, many others, sir. These are GTAs like Agarwal Packers and Movers. So now, as a GTA, you have 3 options, sir. First option is that you don't pay tax. You opt for RCM or you are under RCM. Your recipient pays tax at the rate of 5%. Those are specified recipients. We'll not go into that. Who are those? Now, the second option is you choose to do your compliances and you say, no, I will not put it on the recipient. I will pay tax. I will pay tax at the rate of 5%. Now, this 5% lower rate is given to me basis a condition that I don't avail any ITC. Why is there a concessional rate? Why? Because I am not availing ITC. That is why the concessional rate. Now, the third option that I have is that I would pay at a higher rate of 12%. Now, this is not a rate of 18%, but 12%. Why? Because a major input of mine is petrol and diesel, which is not liable to GST. So therefore, obviously, I have to not get a 18% rate. I should be a service provider getting a lower rate. So I got a lower rate of 12%. So 3 options are 5% RCM. That 5% RCM payable by the recipient is eligible as ITC to the recipient. Second option is 5% FCM, that is I pay it, is eligible for ITC to the recipient. Third option is 12% FCM In this case, this 12% is eligible as ITC to the recipient, as well as I am eligible for ITC on the input, capital good and input services, major being the truck that I must have purchased or hired. So now what they say is, by default, a GTA would be under the RCM. That is, if I don't opt for anything, whatever services of GTA I am providing will be liable to tax on RCM basis by the recipient. So the recipient has to pay at the rate of 5% and would be eligible for that 5% ITC subject to other conditions being satisfied. If I opt and I have to make this option by the first, from the 1st January of the previous financial year till 31st March of the previous financial year, that is for the financial year 24-25, I had to opt for FCM by 31st March of 2024. So if I do that, I can choose between 5% FCM or 12% FCM. Now, once I opt, this goes on, this attaches to me for the complete financial year, and I can only opt out by way of an active step of opting out by filing annexure 6. That also, if I opt in 24-25 and I want to opt out now, I can't opt out in 24-25. I can only opt out in 25-26, and that option can be exercised by me only within 1st January 2025 to 31st March 2025. And if I don't opt out this by 31st March 2025, then this FCM is attached to me for the next financial year, and it goes on like this. So that is the mechanism under GST today. Along with this, if I take an FCM option, I also have to declare this FCM option in my invoice that I issue. Along with this, an additional information is, as a GTA, I may not issue a tax invoice, and I am allowed as a special circumstance to not issue a tax invoice, but my consignment note itself may be treated as a tax invoice. That's the long and short of it, sir. GTA.
So you're on mute, sir, Sushil sir. Sushil sir, you're on mute.
Sorry. If GTA has not filed any return, any annexure, that is annexure 5, so it will be amount to that they are liable to pay reverse charge, and 5% will be the rate.
Yes, sir. They will by default under FCM, RCM.
Yeah. So the person who is receiving service from GTA, they must ensure, they must confirm whether they have filed any declaration or not. If they so say, they may show that they have filed a declaration, then the 12% rate will be charged. And again, the option is there whether it is reverse charge or forward charge. So it is not so easy. It is complicated. But one thing I must appreciate, Saurabh has mentioned that if 12% rate tax rate has been paid, whether in forward charge or reverse charge, the supply chain, the chain is maintained, the ITC chain is maintained, and the credit of the whatever accruing to the GTA is getting passed on, and ultimately the user getting benefit of the credit which is accruing to the transporter. Otherwise, if you're paying taxes under 5%, that supply chain is getting restricted or broken. So credit is not credit is lost with the GTA. Sankarji, you want to add something here, or we can move to the next query?
Just need an emphasis on the people who are not filing, the GTAs not opting anything. They naturally, as we discussed, will be under RCM. The person who is receiving their services will have to go under RCM. And the other major thing is, people are still not realizing that I am not doing GTA, but they might be a CHA, clearinghouse agent. They also do GTA services. Now, even those people will have to take care of these provisions. Precisely. Because if they don't do anything, they continue as a CHA, but they also want to do billing as a GTA, then in those scenarios, it becomes RCM.
Yes.
The mistake that they do is they collect it, including this value, and they try to do payments, and they end up in all 5, 12, 18, all the categories.
Correct. Because they never recognize themselves as GTA, no?
Yes. Because see, law recognizes them as GTA for that little bit of services they do as a GTA, but they realize it only when they bill. But the time is long gone. They have not exercised the option.
I must appreciate here that the custom house agent and clearing and forwarding services, these two services providers sometimes act as GTA also. So they should be specific. Their invoice should be specific. They must have the proper service accounting code used for that. then they may clarify that what they are doing, and definitely the tax implication also make it clear. Sankarji, now I'm moving to the next query.
Just one more thing I wanted to add here.
Yes, Shubham, please.
Once we are taking the ITC and we are, let's say, taking ITC and paying at 12%, suddenly we try to opt out and pay at 5% under RCM. We also need to remember that ITC reversal would be involved, because any asset that we have has a life of 5 years as per GST. So the proportionate ITC reversal would be involved by depreciating at 5% per quarter under GST. So that is the only thing which I wanted to add here.
Thank you. Although it's short questions, but I wish only you to ask all three. You may touch upon it. GTA taking service of another GTA.
Sir,
What will be the taxation? What will be the taxation? Whether this RCM, forward charge, and no tax. These three, yeah.
sir, the exact example that a GTA getting service of GTA is a misnomer, sir. A GTA cannot get a service of a GTA because, in my understanding, you cannot have two consignment notes for one single transportation. Correct. So you cannot have two GTAs for a single transportation from point A to point B. So one thing is this, because the actual person who is issuing the consignment note is the GTA, and the person who is not issuing the consignment note is either a GTO or is a person who is leasing trucks to a GTA, which service is otherwise exempt from GST. So that is the actual scenario and the perfect example. But we should also keep in mind that this happens in the industry, that you have a GTA and then a subcontractor GTA, then I have a subcontractor GTA, and everybody is paying 12% and 5%. And then effectively, if you are in an FCA mechanism, the credit chain follows, and if you are not, then credit chain is broken, sir.
Thank you, Saurabhji. Sohamji, what is your take on this?
Completely, I agree with Saurabhji. So services which is provided of leasing of trucks to GTA is what people call as GTA to GTA services on a general basis. So this service is exempt under GST. And the one who is issuing the consignment note is usually the person who is the recipient of services, who's actually issuing the consignment note. And the supplier of services which he is providing is only merely hiring of trucks, which is an exempt supply.
Thank you. I think Sankarji also
And I just want to add that there is a recent trend which we are seeing for the service tax regime. We are going through 26 AS versus the returns, where in the same problem we had, the GTA was claiming I am a GTA, and he has given the vehicle on hire to another GTA. So the other GTA has deducted tax and remitted against his name. Now department wants service tax on this. But he's saying it is exempted. Now they are asking for contracts. Now these are stray one-time transactions. For example, I take from Chennai a load to Delhi. While returning, I cannot come empty. So I just hook up with some of the people who are there. These transporters get a vehicle, get a load for me, and I come to Chennai back. Now in this, for that one transaction of 32,000, a contract may not be there. But the proof is 26 AS. He has deducted the income tax on me. So because of that, the assessments are becoming bigger and the tax is being sought in both ways. So those are the areas where GTA to GTA transactions also need to be taken into consideration for documentation purposes.
They're basically asking for the consignment notes of the recipient GTA also, that as a proof, so which becomes a very difficult task in this situation.
And these people do not even know each other.
Absolutely.
Yes, so correctly we conclude here that GTA to GTA is no transaction exactly. These are the transaction between the leasing of the vehicle to a GTA. It will be one GTA. There cannot be two GTA. That is the Goods Transport Agency. There cannot be two consignment notes issued for a transportation of one consignment. So we conclude this particular discussion here. We are not moving ahead. Devendra Kumarji is asking that whether GTA is required, is liable for registration. Mandatorily, they are not liable. They are only providing GTA service and not opting for the forward charge. Opting for the forward charge, they are not liable for registration because of the reason GTA services are totally into reverse charge, and if it is not provided to a person who is not falling under the reverse charge, then it is exempt. GTA provided service to a person who is not covered under reverse charge, then that particular service is exempt. So GTA is not required to take registration mandatorily if they are not opting for forward charge or not providing any other services or any other supplies they are making. So now I'm moving to the next question. Sankar Narayan ji, uh, what need to be considered regarding tax liability while filing the return for the month of March, which we are going to do on 20th of April tomorrow, although date is today is the one day, but at least we can discuss for the technical purpose, and people must aware and take care of the things.
No, we are all last date filers, sir. It will be helpful.
And in Tamil Nadu today being election day, so there will be filings much only in, tomorrow, happening tomorrow. It in a way, March return assumes importance for one reason, that it is the last return for that financial year, but not the last chance to file for that financial year. Hence, some people would want to contain their amendments and changes happening within the same financial year. That is where the March return becomes very important. Any kind of reconciliation with the books of accounts at the last minute, trying to set your books right before March and doing the corresponding corrections. Now that will help that they do it in the March month return. Is it okay to do it in the subsequent returns? Yes, absolutely fine. We can do it in the subsequent returns. Section 39 also allows us to do, because we can do it before the next year, the October return of the next year. We can do it, carry it out in any return filed before 30th of November. But what happens here is, if we do it in the subsequent year, there is a need for us to report that properly in the annual return to get it covered, so that in a later day, we are able to establish that the liabilities or the reversals that had happened during the next financial year, but which actually pertains to earlier financial year, needs to be captured. But if we do it in the March month return, at least that year's liability gets contained within that same year. That year's assessment also can be focused only with that year's returns. That is the perspective from which the output related reconciliations, the ITC related reversals should be focused on in the March month return. So March month, we have to identify the reverse charges. We have to identify the ITC reversals that are required to be done, as well as the output liabilities. Anything is missed out on advances, we have not paid any taxes that needs to be adjusted. All that will have to be carried out. We do have a chance to do it after that, but doing it in March is prescribed.
Thank you, Sankar Narayan ji, for taking this. And Subhamji and you, Saurabh, anybody want to volunteer? Giving option if you volunteer, otherwise I will move to the next.
Sir, only one thing is that people would have certain times. So suppose tomorrow I have to file my 3B and I call out my annual report. We call it annual report, or my consolidated GSTR1 file till date for the financial year 23-24 and my 3B, and I find out that I have made a mistake in filing GSTR1 for the month of March. Now the question that comes is that should I make the same mistake and do a matching of 1 and 3B, or should I correct my mistake in 3B of this month and then correct my GSTR1 in the next month? Now, if my view is that if your interest liability doesn't hurt you so much, then you should always match, because non-matching is always a trigger point. Though it may invite fees for me as a lawyer, but would not be great for the SSC. So it is always a dispute between should I match or should I do the correct thing. So I think if interest liability is not so much, one should always match your GSTR1 with GSTR3, because it will never trigger the officer to issue you a notice. And these days officers are doing nothing but following what the AI system or whatever the information technology system is giving them as notices prepared, and they're just writing their signature in the bottom and din on the top and then issuing the notices. So we should always avoid a 1 and 3B mismatch while doing so.
Subham, what is your take on this?
Sir, I was just about to say what Saurav has just mentioned. In my view, also, in a way, the scrutiny returns, even though we have made a lot of corrections in GSTR 9, but explaining that to the department has been a bit of a hassle, given that the workings are not always properly maintained for the client. At least when we know that during the same year, if the relevant parameters for avoiding scrutiny have been followed. So that always helps in making sure that at least we don't get the notices in the first place. So I would suggest to do it in the same year. But having said this, if there are mistakes which have been carried forward, which I can't help, I can always do it next year. So that's my take on it. The first preference is doing it in March.
Anyway, we have to show liability for the month of March in our balance sheet. Whatever we are going to discharge, that liability will anyway going to appear in the balance sheet. So it is not impacting our financials much. So we can do it as suggested by. Now, Subham, I am asking you a question which is, I think, most of the viewer will be interested in knowing this 43BH in income tax. Although Vice Chairman was saying nothing to discuss about income tax. So we are not discussing income tax, but I wish to know what is impact on GST, whether there will be any impact of this on GST. Payment has not been made to the supplier, 45 days and all. So not to discuss income tax, but discuss GST implications in this.
Sir, very interestingly, whenever we have this question with regard to Rule 37 and proviso to Section 16.2, which talks about payment to the supplier, which has to be made within 180 days of the date of issue of invoice. The question which you always used to be asked, how would the department come to know about this? Now, the income tax department, though it has not prescribed 180 days, but for MSMEs, they have provided a limit for the number of days where the payments have not been made. So in a way now, this reporting is going to the income tax department as to which payments are now being reversed under income tax laws because the payment cannot be made to the relevant MSMEs within the relevant time limit. So I believe once this computation is being made for income tax purposes, it would definitely have an direct implication under GST, because if we don't make payment within 180 days, even GST involves reversal along with interest wherever applicable and reavailment upon making payment. So in such cases where more than 45 days have passed and more than 180 days have also passed, now under income tax laws also we have to report, and in the financials we have to report as to what is the balance which is outstanding for the particular period for receivables. For instance, whether it is less than 1 year, from 1 year to 2 years, or more than 2 years. So there are different time limits which I have to report over there. So from there, the income tax department and both GST department can easily find out which are the people to whom the payments are to be made for more than a particular time period or receivable for more than a time period. So I believe this is going to have a huge impact wherever the financials and the income tax department has reported significant liability to this account. So this is something which we should do as a part of our reconciliation now regularly, though a lot of us have been trying to avoid it over a period of time.
Thank you, Subham. And both other panelists, if they want to add something, welcome. Otherwise, I can move to the next slide. It is we all agree to whatever Subham have submitted, so no more discussion here. So Saurabhji, I want to ask you next query. That is the sometime it is seen that the import of service has taken place and people are not properly doing it. What the import of service, like some of the software we have subscribed, which is from foreign country, they have not charged GST. What is the take on this? What is your suggestion? One should take care, at least on the month of March for the entire year.
Sir. So basically, import of service, as we all know, is liable to tax, liable to GST on RCM basis, and the liability accrues either, so this is whichever is earlier, 60 days from the date of invoice or the date we make payment to the foreign vendor, whichever is earlier, is when the liability is the month in which the liability to pay or deposit GST to the exchequer accrues. Now, this is normal, sir. Now, but in a scenario where we import services from an associated enterprise, that is a related party, and in those cases, this time limit of 60 days or date of making of the payment to the vendor doesn't apply. We have a specific provision under Section 13 of the CGST Act, which provides that in case you have imported certain services from an associated enterprise outside India, in that case, your liability to pay tax would accrue as on the date of booking that transaction in the books of accounts. Now, a typical example, sir, like if you have a Nokia Solutions Network or Nokia Finland or Nokia BV Netherlands, now and there is Nokia India, and Nokia India has to pay royalty for whatever trademark, intellectual property, software that it uses from Nokia Netherlands, and this trademark or royalty payment is a percentage of the turnover that Nokia India has in India. So when will Nokia India calculate and tell this turnover percentage to Nokia Netherlands? Mostly in the month of July to September, anywhere between following the financial year. So suppose it is for 23-24, it will be only in July 24 or maybe September 24 that you would be able to finalize your turnover and tell Nokia Netherlands, see, this is the turnover, actual turnover that we have done in the previous financial year, and 2% of this is liable from us to you as royalty. And now you please raise an invoice and we shall make the payment. But when this liability is calculated in the sense of royalty payment, although this is calculated and finalized maybe in the month of July, September, October, whatever, but this amount as per AS1 is recorded in the books of accounts as on 31st March 2024. So now the law says that in case you have imported certain services from Nokia Netherlands to Nokia India, the liability to make payment of GST for these services, being import of services, shall be the date on which the payment is made to the vendor or the transaction is recorded in the books of accounts. Now, the transaction would be recorded as on 31st March 2024. Now, so therefore, for this royalty that you had finalized in the month of September, maybe October of 24, liability has accrued and has fallen back on you since March 2024, which had to be paid by April 2024. So, our advice to people was that many of us and most of us have clients who would have foreign holding companies wherein these royalty payments would be made. So we should always keep a check in the month of March of the provisional royalty that would be due to the foreign holding company and make a payment of GST in the return for the month of March 2024 by 20th April 2024, so that when actual royalty is calculated, you don't have a lot of interest liability pending on you in the month of September, October when it is actually calculated. So that's the caution point that we wanted to highlight in respect of import of services from associated enterprises.
Thank you, Saurabh-ji. Shankarji, you want to say something on this?
Yes, sir. On this, there is a legacy from service tax as well.
Sir.
We have the point of taxation rules, Rule 7.
Sir.
That is where this was handled in the erstwhile service tax regime, where the wordings were very clear. It said date of debit in the books of accounts. Now in GST, somewhere that transition happened, they have lost that word debit. Instead, they have put the word date of entry in the books of accounts. Whether that entry is a debit entry or a credit entry, that is not clarified as yet. Hence, I feel the conservative approach would be to consider it as date of entry, means that the date I make a provision. And based on that, paying the reverse charge. But this will be tested in the days to come, is what I would just want to add.
Shubham, you want to add something?
No, sir.
Thank you. So now I'm moving to the most important topic, that is the ITC, which is impacting all of us. None of the notices I have seen so far issued by the department, whether SMT 10 or DRC 01A or DRC 01, that is not containing something about the input tax credit. Something must be there in input tax credit. So what precaution we should take at the end of the year so we can avoid this type of notices? Over to Shankar Narayan.
When it comes to input tax credit, the long list of reconciliation happens. Our co-speaker Shubham already touched upon this point by saying that we need to have a primary ledger and a secondary ledger. Wish people maintain it that way, then that will be easier. I'm just reiterating the point, which is whenever I receive and book an invoice, I will avail the input tax credit. But on the other hand, I'm going to take the input tax credit in my GSTR 3B only when there is a matching exercise that is happening. So there is a time delay between the time that I book the invoice and it finds a place in my financial ledger vis-a-vis the time it finds a place in my electronic credit ledger. This differential time, there can be reconciliations. For instance, I book an invoice today and I avail the ITC, but my supplier files the return later on, maybe after a month. Then it will appear in that month's 2B and I'll be able to avail the credit only 1 month later. Citing this problem, there might be a reconciliation between our ITC, which is appearing in books vis-a-vis what is appearing in my electronic credit ledger. And very importantly, especially after the circular 170 and all, the ITC reconciliation has become a tedious exercise as well as an exercise where we cannot afford to even have a little slack. It has to be to the dot. For example, if I book something as ITC in my books, I should be able to demonstrate first it is eligible and it is not a blocked credit. And then I have to match it with the GSTR 2B and avail the credit ultimately. And when I avail it, it goes into my GSTR 3B and into my electronic credit ledger. This reconciliation will have to be done as the first part, which I consider as a major exercise when we finish a financial year. And this also calls for some other data which is required at a later point of time, that which is pertaining to the part of one, the common ITC reversal, Rule 42 and 43, as well as the other later requirement which can arise in terms of ITC is with respect to the suppliers not being paid within 180 days. Or I can also have a scenario where in the previous financial year, I'm talking about 22-23, I had carried forward some credit which can be availed in 23-24 because it is still not matched. But by the time I reached November, or even after November is over, it is still not appearing in the electronic, the GSTR 2B. I cannot avail the credit in electronic credit ledger, which will still be carried by people in their current assets, which need to be written off. So that precaution has to be done as on 31st of March, so that when we come into 1st of April, in 1st of April, whatever I carry forward as ITC in my books has to be those which are actually current assets, which can be claimed by me in the subsequent months. So it can only be invoices pertaining to 23-24. There cannot be invoices pertaining to earlier periods. And the other reason why this reconciliation will have to be done in a detailed manner is to report the data in table 12B and 12C of GSTR 9C, wherein ITC of the booked in the earlier financial year but availed in the current financial year, ITC booked in the current financial year but for which credit is availed in the subsequent financial year. These two needs to be clearly segregated and reported. Hence, for this reporting as well, the reconciliation of ITC as to how much is carried forward as a balance, how much is booked and carried forward as a balance, or how much is booked and reversed shall also have to be maintained. So from that perspective, it is very important that ITC, these reconciliations are taken care, plus the common ITC reversals, Rule 42 and 43, which I was talking about, wherein there are instances where people, when they are expected legally to do the reversals on a monthly basis, and Rule 42 sub Rule 2 allows us to do a 13th reversal, which is at the end of the financial year before the September of the following financial year, to do a consolidated reversal for the year and see whether we have done over reversal or under reversal. Be that as it may, but there are people who do not do it on a monthly basis. They do it only at the end of the year, which is also fine as long as they identify this ITC, which is common, which is specific, the T1, T2, T3, T4, as mentioned in Rule 42, and accordingly, that reversal should also be carried out, which typically happens in the next financial year, in the first month, when we are doing, either we can do it in the month of March returns, or we can do it in the month of April returns with 1 month's interest. So that perspective also, the ITC reconciliation assumes importance. So these are, I would say, are the main steps that one needs to take from an ITC perspective.
Thank you, Shankarji. Saurabh, you want to say something? I think you are eagerly waiting for the chance to.
No. I was consuming all the knowledge, sir.
You want to say something, Saurabh, on this?
No, sir. I fully agree, sir.
Shubham, next question. If you want to say something on ITC,
So one more
you
thing.
are welcome.
The last year they have inserted this electronic credit reversal and recredit statement. Perhaps this would be an important time to make this reconciliation as to what is the balance appearing there. What are the invoices which are yet to be availed, and the balance which is the closing balance of the electronic credit reversal statement should be equivalent to the total amount of ITC which is yet to be availed.
Correct.
So that is something which I think can be a additional exercise which can start perhaps from this year.
90% of us must not be following, sir.
But we have to follow.
Sir.
This is a requirement. Shubham, sometimes we have the allocation of ITC on input services. It is received by one unit or the other. Distinct persons are consuming it, or more you can elaborate on the input service distributor or cross charge. Government is now made a recent amendment also, and exactly they said the input service distributor registration is mandatory. They have used the word input service distributor registration is mandatory, but how it, when, where, when they will be imposed, notify the particular section, we will definitely see. But on year end, what will the impact of this? How to allocate this service?
Okay. So perhaps this is the right time to start planning for ISD. So last year in the council meeting, it was stated that ISD and cross charge, these two are overlapping concepts, and thereafter a circular came which pretty much said that even if you're not following ISD, we are not going to penalize you. But at the same time, the recommendations of the council meeting was in the future, we are going to make it mandatory. And they classified all kinds of matters into two kinds of services, I would say. One is internally generated services, which are provided by one entity to the other entity, one branch to the other branch within the same entity, which is internally generated services. Second was third party services, where a vendor is basically providing us services which is affecting multiple branches or which are attributable to multiple branches. So for the first case, which is internally generated services, it is stated very clearly that cross charge would be applicable, and even if you're not doing cross charge, the value would be deemed to be nil, assuming the recipient is eligible for full ITC. But when it comes to third party services, till now, whether we were doing cross charge, whether we were doing ISD, or whether we were not doing anything, nothing was going to penalize us in terms of the GST provisions till date. But after the amendment, which has been notified from 1st of February, I mean, it has not yet been notified, but it is supposed to be notified in the future date. The Finance Act has already come in, which has provided this ISD provisions becoming mandatory in the future date. So a lot of steps are required for us to stay prepared, because we need to register as ISD if we are multi-location entities and there are certain common services. We need to examine all our expenses and identify which expenses are common expenses which needs to be attributed. Thereafter, the vendors need to be identified, and thereafter we need to ensure their vendors that in their customers masters the new GST and number of hours is updated. So which is a tedious task. Ensure that all the invoices are now issued in the name of the ISD, and ISD is now distributing all the credit. The returns process is again a task when it comes to GSTR 1 being available on 11th, and it goes to 6A of the recipient on 12th. On 13th, we file GSTR 6. On 14th, it comes to 2A. Or by 20th, again, we file 3B. So this process becomes extremely cumbersome, getting to issue ISD invoices. And one of the most important aspects which we might be ignoring is with regard to books of accounts. For ISD, we have to have separate books of accounts to manage it properly. Otherwise, our reconciliation internally becomes very difficult. At least there should be a separate account in a SAP. There can be a separate business unit in Tally. There can be a separate account to ensure that the ITC gets distributed properly. So additional reconciliation at ISD level, and thereafter what are the ISD distributing it to the other recipient branches is something which would be required. So according to me, this whole task of preparation for any company which is having multi-location is going to take a few months. And historically speaking, we are seeing that the provisions of Finance Act getting implemented from 1st October in the last couple of years. We don't know what would be the situation this year, given that there will be a final budget which would be announced. But having said this, we might not get a lot of time once this gets notified, because a lot of preparatory exercise is needed. So in my view, we should start preparing all our clients who are having multi-locations right from today, and get all the vendors updated, all the business systems updated as soon as possible.
Thank you, Soham. Very relevant with the time that you must take care of it. Now I'm moving to Saurabh. Saurabh, please throw some light on this temporary reversal and permanent reversal, which Soham also touched upon, that how to maintain our accounts regarding this, and what is ineligible ITC made on 3B returns of the previous year are aligned with the books of accounts. So what is your suggestion on this? Basically, we have to reverse the credit, retake the credit. Some credit we have to reverse permanently. It is not coming back to us. So please elaborate this topic, and what is your take on this?
So I'll just give a background behind it, sir. Now, up till July 2022, what we were doing was, in our GSTR 3B, we were self-calculating what should be taken as ITC by doing a desk or in-house reconciliation of 2A with whatever we have as invoices during the month. And suppose we have a 2A reflecting 100 rupees as ITC, but in our books it is 80. So we used to write 80 in our GSTR 3B under all other ITC, and that's about it. 80 is what we used to get. Now, as and when notices used to come from the GST department asking us what is this 80, we always had the freedom to choose whatever invoices we wanted to show under this 80. Now department is troubled that assessee can always maneuver and frame or window dress all this 80 as an amount. So what did they do? They came up with GSTR 2B, which is not a dynamic statement, it's a static statement. It doesn't change. 2B yesterday is 2B today, will be 2B tomorrow. Now what did they say? They say whatever comes in your GSTR 2B will be auto-populated in your GSTR 3B. This is with effect from August 2022. Now from this ITC, so if my 2B says 1,000 rupees and this is reflecting in my GSTR 3B as 1,000 rupees, they say, that is what they say, people will follow or otherwise, or are following or otherwise is a different question. 1,000 is reflecting in my GSTR 3B. They say from this 1,000 rupees. Now this 1,000 has a backup because GSTR 2B contains all the invoices which culminates and sums up to 1,000 rupees. Now from this 1,000, GST department is asking you in your 3B, tell us what is ineligible, that is permanent reversal. Tell us what is 42, 43 reversal, that is permanent reversal. Tell us how much or how many are the invoices which are reflecting in 2B, but since it has not come to you or you have not booked those invoices, so tell us that also, reduce that as temporary reversal, and then the balance is taken as ITC. This solves two issues, sir. First, that I told you that now the SSE cannot maneuver, cannot window dress. What is the backup behind this 100 minus 20 is equal to 80, which earlier the SSE had the option to, because now GSTR 2B is fixed. It is not dynamic. First solution is this from the to the department. Second is, sir, since in the era before August 2022, we were just reporting one figure as the figure that we wanted to avail as ITC. We never used to care about reporting regarding ineligible supplies, because that used to have nil financial impact on us, and whatever has nil financial impact on us has no relevance for us. So we never used to report that. Now what does that culminate into? That culminates into a certain amount of ITC that hits me in my 2B or in my 2A, but is never reported as eligible or ineligible, because I never report my ineligible. So what happens is, suppose 1,000 hits my account as Saurabh Singhal, and I only take ITC of 800, what happens to 200? If I report 200 as ineligible, that 200 rupees ITC, half part of it gets transferred to the consumption state, that is my state, Delhi. But if I don't report this 200 as ineligible supply, this 200 keeps lying in the pool account. And now only when November will pass by, November of the following financial year, will that government get to know, nahi, ab to Saurabh ko 200 rupees ka ITC mil hi nahi sakta. Now this settlement of funds will happen between state and center. So there was a time lag because of my laziness, my ineffectiveness. So what they wanted was that I report my ineligible supplies, so that settlement of funds happen in time between state and center. And I also should not be able to maneuver to window dress my ITC as declared in my 3B. This was the two-pronged approach why temporary and permanent reversals was introduced in GSTR 3B. The only problem was that all other ITC that used to get auto-populated from GSTR 2B was not made uneditable. It was still editable. So as we Indians do, whatever is editable, we will edit. So what did we do? We pressed backspace and did the same thing we used to do. Whatever we wanted to take as ITC, because it has financial impact on us, we used to report again. We are from since August 2022 also with the changed format. Most of the assessees, what they do is, jitna ITC chahiye wo report kijiye, report what you want, leave the rest. Now what is the repercussion? Repercussion is now specifically Maharashtra as a state, they are giving penal notices to all these assessees who are not issuing, who are not reporting ineligible supplies. who are not following the format since August 2022, and they are asking them to pay penalty 25,000 each under both the acts, and also asking them to make a credit entry and a debit entry in the relevant month's return. So suppose the notice came in March 2024, they are saying whatever credit you did not avail and you do not want to avail, take a credit and do a debit. Take a all other ITC may credit and other reversal may debit. Do that, which is not correct, but they are asking so. So what I want to highlight is that although government gave the assessee another option in August 2023. What did the government do? Government said, okay, we introduced a change, you did not follow, you did not do other reversal, temporary reversal, permanent reversal. In August 2023, they came out with a ledger. They said, okay, we'll delineate it from the return and give you a ledger, credit reversal ledger. You report whatever you had to report as other reversals, as temporary reversal in this ledger, and you fill this ledger by February or January of 2024, and then continue with the new format as it should be. But I suppose most of the assessees have failed to do that also. So my only thing is that in this new financial year, at least, we should start following the new GSTR 3B process, wherein we do not edit all other ITC as is populated by the GSTR 2B in our GSTR 3B, and we work on that amount and reverse the temporary reversals, reverse the permanent reversals, and come out with the actual ITC that we should take. And then whenever we want to avail ITC which we have already reversed under other reversal, we should do a reclaim and all other ITC added as is given under the press release when this new GSTR 3B was released. So the takeaway is, sir, that it is not too late. Still 2 years have gone by, but still now, at least with effect from 1st April 2024, we must, and all assessees must, follow the new process of GSTR 3B. Else, I am telling you now, else for every month's return, you can get a penalty of 50,000 each. That is the repercussions.
Thank you, Saurabh, for touching very important point and highlighting and taking this early. And since there is no provision in the law for not reporting all this, for penalties, they are applying the general penalties of 25,000 each.
Correct, sir.
In CGST and SGST. Shankar Narayanji, I am coming with next question on this, that Saurabh number of time has mentioned that you have to take the credit by 20th of by November. So how it is important for whatever we left out, if something is left out in the errand, up to what date we can take this? What is the relevancy of this November date? Can you throw some light? Earlier it was due date of filing of September month return. Now it is 30th of November. Up to 30th of November we can do this. That we all know. But what type of things to be taken care, and what reconciliation we should do, and how to control this in our sub accounts, and how to record the transactions so nothing can be missed out.
First, I will take the ITC part, sir.
Yeah.
Then I will come to the other reconciliations. With respect to this November 30, the importance of the date is from section 16.4 perspective. Very important from an ITC perspective, because in the first 4 years up to 21, what we had was, it was the due date for filing return for the month of September, which typically had to be 20th of October. So if I do not avail the ITC for a particular financial year related invoice before 20th of October, I am not entitled to take that ITC. Now this made a lot of the rounds in terms of department issuing notices saying, especially in 1920, where in the month of March we had the COVID issue, and it continued up to September. So wherein many people, their February and March return, they had filed only in the month of October or November, in some of the cases even in December. They had filed February 2020 return in November 2020, claiming the ITC. Now department objected that, stating that you are filing it beyond the due date for filing of return for the month of September, so the credit is not to be allowed. There are multiple cases across India going on the same matter in various high courts, and there is some traction from the government angle also. CBIC angle also is what I get to hear. So we may expect some good news in the near future. Be that as it may, the core issue was addressed by way of giving an amendment. The amendment came in 2022, wherein they said it is not the due date for filing of return for the month of September. Let's put it this way: before 30th of November, any return that is filed in which the credit should have been availed. Now, this becomes even more interesting because my March return filed belatedly on 29th of November, that is when I can avail the credit. But an ITC pertaining to the previous financial year, if I intend to avail it in April month's return, and that April month's return is filed in December of that following financial year, I can never avail that ITC. So people are still, some of them have not fathomed this amendment in terms of they are thinking that, okay, it is up until November. So November return, I can take the credit. It is not so. It is the 30th of November cutoff date. Any return filed before that cutoff date, the ITC can be availed. So that is how this amendment had come in. So that is the perspective with which both, Saurav and Subham also touched upon earlier. The ITC reversal shall have to happen because 22-23 we would have posted something to avail in 23-24, which wouldn't have appeared in my 2B. So which will still be there in my current assets. I need to reverse it now when I'm closing the financial year. Now, with respect to reconciliations, I will split the reconciliations into three major parts: my output related reconciliations, RCM related reconciliations, and ITC related reconciliation. ITC, I think much has been discussed already, so I'll quickly complete it. ITC related reconciliation, whatever is appearing as on 31st of March as my closing balance in the current asset should be the ones which pertains to the invoices raised in 23-24, and those should be eligible to avail before 30th of November in any of the returns. And the only reason these are postponed is only because they are yet to be matched. That could be the reason. So this is the reconciliation for ITC. Now, on the other hand, when it comes to reverse charge, what is the reconciliation that we need to perform? Recently, it is common that from 2B, our RCM liability is identified by the department because it is also getting populated in our GSTR 3B that way only. Hence, the RCM have to be split into two major categories: from registered people, from unregistered people. We're not discussing 9.4 here. Even for 9.3, there could be RCMs from unregistered person. So the 9 subsection 3 RCMs from unregistered person, we don't have to have a separate reconciliation per se. It is stemming from our book entry. It is only from our P&L. Whereas the RCMs which are there under 9 subsection 3, but which we get the liability from a other party, for example, a registered GTA, a registered law firm reports against me and says payable under RCM, yes, then I am supposed to maintain a reconciliation for that. That is, whatever has appeared in my 2B, when did I pay the GST? Because they might have uploaded the invoice in March. As Saurav discussed earlier, we do have a time limit of 60 days, the day following 61st day or the date of payment, whichever is earlier. That is when I'm supposed to pay the RCM. They might have reported the invoice in March, but I would be making a payment to them only in April. Then my liability to pay RCM occurs only in the month of April. But still, it has appeared in my 2B in the month of March. So I need to have a reconciliation that this liability is there in 2B, but I paid it in April. So this is the RCM reconciliation that one has to maintain. Now moving on to the liability, that is my outward liability reconciliation, the most common one, GSTR 1 versus GSTR 3B. Yes, that is the basic reconciliation that needs to be done, with special attention being given to last year reported in this year and paid, and this year liability reported in subsequent year and paid. That reconciliation should be maintained. The next corroborative reconciliation that needs to be done, which is also questioned by the department, is GSTR 7, what is being filed by the TDS deducting government departments. When I receive it, the reconciliation of that turnover with my GST turnover in my GSTR 1 and 3B, plus if I am going to be a person who is selling through e-commerce operators, GSTR 8 related reconciliation with my output liability declared turnover. Now, these would effectively be able to demonstrate that whatever has been reported by somebody against me is also covered in my liability reporting. These, I would say, are the most critical reconciliations from three broad perspectives that needs to be done.
Thank you, Shankarji. Saurav, you want to add something here?
No, sir.
No. Subham, Subham is also nodding his head. So is also in line with Sankarji, and we agree. Vice Chairman, sir, you want to supplement here or inform something? You have raised your hand.
No, sir. No, nothing to supplement here. I have a very different question. So when you are maybe if you
No, sir,
permit
you
now,
please
or
do.
maybe because it is
Sir, you
related to
please.
ITC, something related to ITC.
Yes, sir. We are discussing the ITC area only, so you can throw your
Okay,
question.
I'll come to that, sir.
So
Sure.
people will
Sir,
will not get monotonous. They will get different view also.
no, I'm sir. If this is my query to all the three, anyone can you throw light on that? So you look at Schedule 1, there is this first clause which says that disposal of assets without consideration. Where ITC is taken, a reversal should happen. Now, generally, this is overlooked because it is somewhere lying in the Schedule 1, and as a person who is registered, a small timer, maybe having a 4 or 5 crores turnover, paying regular GST, having some 20 chairs in his office, the chairs not available, they are at home, or we don't know where they went and all. Basically, this may be a very small thing, but this also entails a reversal. And do you, any of you may answer, do you seriously think that this aspect should also be looked into? Not necessarily charter don't come in the beginning of the year and all those April and all those stuff, unless and this bank audits are already over. So how many of them did it? How many of them did not do? How many of them reported assets disposed of on which credit was taken? None of us know that. Now, do you think that the banks, the registered persons management or the accountants or the chartered accountants working there, what is it that you would like to suggest to them, especially with respect to Schedule 1?
Sir, may I, sir?
Yeah. Please.
Sir, Schedule 1 says permanent transfer or disposal of assets, business assets, on which ITC has been taken. Now, this is not something that we read independently. We read this with 18.6, sir. Section 18, subsection 6, sir. Wherein it says if you supply certain capital goods on which you have taken ITC before their useful life, you have to reverse a certain proportion of credit. And you have to also read it with section 17.5, which says goods lost, destroyed, given free of cost, and the like, sir. So basically, the whole section is, so when you read Schedule 1, you read it with Schedule 1, Para 1, Section 17.5 and 18.6. So if suppose those goods that you have permanently disposed of and on which you had taken ITC, which is now a deemed supply as per Schedule 1, and those goods happen to be capital goods, then you read it with you read it with 18.6 and you reverse ITC considering 5% depreciation per quarter or part thereof on a straight line basis, sir.
I'm not on capital goods at all. I'm on goods. That's it. I'm on goods.
So goods could be of both the nature, sir. Could be capital goods, could be otherwise. If
on goods, that's it.
Yes. So if those are, I'm just saying that once they say under Schedule 1, it's a deemed supply and therefore tax is payable, then you just don't close your eyes at that. And if those goods are the goods in question are capital goods, then you read Schedule 1, Para 1 with 18.6. And how do you calculate? So they have said it's a deemed supply. And then what is the valuation? I say the valuation is as per 18.6. That is transaction value or WDV applying 5% depreciation per quarter, whichever is higher. And if those goods are if those goods are not capital goods but normal goods, so if those goods are, sir, anything, sir? You were saying something, sir?
No, continue.
Sir, if those goods are not
continue.
Yes, sir. So if those goods are not capital goods but normal goods, sir, in that case you have to just qualify yourself whether are you under 17.5. If you are under 17.5 and you have reversed ITC because of 17.5, I think that is enough compliance of Schedule 1, Para 1. You don't have to separately pay GST on that again. That is how I
any other
subject to
Shankar?
my co-speakers.
Any view?
Yes, sir.
Sir,
On the same point, the business asset is the word that is used. So I think Saurav has brought that already. Business asset need not necessarily be a capital asset alone. It can be anything. Even a current asset will become a business asset. Inventory is also a business asset. So when it is given free, the 17.5 category that he is talking about, are given without consideration. Let me put it the way it was defined in Schedule 1. It is given without consideration, but on which ITC has been availed. It becomes a deemed supply and the liability has to be discharged. Now, the interesting aspect here is if I buy an inventory item and I give it as it is, people are able to connect it. But if I give it as a free item, as a manufactured item, which is now being given without any consideration, now that is where Schedule 1 will assume the real importance. For instance, I am a pharmaceutical company. I buy various components, but I ultimately manufacture a medicine. Now, that is being given free of cost. Just to promote my business. Now, when I give it as free of cost, that is when the original application of Schedule 1 comes in. Those industries need to identify where they have it as a regular practice. They need to do a reversal. I even have an interesting case on a day of retirement. One of the company gave to their retiring employee certain assets to them and then said, you are free to go take it, meaning it is now yours. Now, GST liability applies on that because it was given on the day of retirement. Schedule 1 very specifically makes him an employee or employee transaction, though it is pertaining to entry number 2. Related party, everything stepped in, we paid GST on that. So Schedule 1 requires that importance.
Sir. So, sir, are you saying that so in case of a pharmaceutical company, sir, are you saying should we pay GST on the input that we have or equivalent to the input that we have availed on the input?
Let us not get into valuation and all those stuff. We are not on that at all. We don't want to stretch the conversation because then it becomes too engrossed and too. Shubham, you would like to anything on this?
One small thing, I would just like to highlight circular number 92, which was issued on 7th of March 19, which had a similar point with regard to free samples and gifts, where I'm giving something without consideration. In that case, the question came in whether it would be considered as a Schedule 1 supply. In such case, it was stated, from what I derived interpretation out of it, is either we show it as section 17.5 block credit. In such cases, the reversal would not arise. Or if we show it as ITC, which has been availed, and the business asset ITC has been availed, and the blockage, the 17.5 reversal has not been done, in that case, it would be considered as a Schedule 1 supply without consideration. So either one of these approaches, I believe, would be fine. And as mentioned, with regard to manufacturing entities, it is always better to show it as a outward supply. Personally, what I believe in such cases is, if the recipient is eligible for full ITC, it is always recommended in case of B2B ITC to show it as a Schedule 1 supply because the credit chain does not get broken. The ITC would be fully eligible. On the other hand, if I feel that it is a B2C supply and the amount of tax is not realizable, it is better to show it as a block credit, because in such cases, my outward supply value would not be discharged, but my input value, which has gone into it on the goods component, only the amount would be reversible. So in my view, this is something which is debatable, and in my view, both approaches can be followed with regard to this.
So rather, Rule 44 provides for it.
Sure.
Yes, Shubham, Rule 44 provides for it that whenever you dispose of a capital good, you should show it as a GSTR1 supply.
Correct. Both for inputs and capital goods. Yeah, absolutely.
So, Vice Chairman, sir, I feel your question is deliberated well and it will definitely help the viewers. But Subham, a few things I want to listen from you regarding the errand. Whenever we go for errand, we see in our profit and loss account different heads of income, like interest has been earned, sometimes script has been sold out, or even the fixed assets has been sold out. There is some loss of profit. So, what will be this? What precaution one should take, or what are things to be done by a taxpayer in respect of all this?
So usually we see, if we talk particularly about the income part, since it has been mentioned, on the revenue from operations, whatever comes in the sales register, we usually pay taxes. But what gets ignored at times is what does not come in the sales register. What comes as part of other operating income or as other income in our books of accounts, which may be scrap sale or maybe on sale of fixed asset or profit on sale of fixed asset, or interest income. All these kind of incomes usually arise in the books of accounts on which taxes may get ignored to be paid. So this is perhaps the right time at the year end when we can have an entire review of the ledger account of our credit side of P&L and see which are the incomes which are susceptible to taxes but may have been ignored by us. The scrap sales, we might require to identify the HSN code and thereafter pay the taxes as may be required. The sale of fixed asset, we have deliberated on 18.6 in detail, I'm sure. So on those, what would be the applicability of taxes on transaction value or ITC reversal minus 5% per quarter reversal? In case of motor car has been sold, as a separate valuation rule which has been prescribed in the separate notification which is there for sale of motor car, where we pay on the differential amount above the WDV value on used motor cars, or interest income if it has not been reported as exempt income, or duty credit scrips if it has been sold in case of export licenses which have been sold. All of these are required to be reported under exempt income. So these are the aspects perhaps we can have a look at it and report at the end of the financial year to make sure our credit side of P&L is almost in line with what we want to report in the GST returns. It may not be equal, but this can make it closer, I'm sure.
Thank you, Subham. Something is left out, Shankarji, or covered?
No, sir, covered, sir. We can move on.
So just one thing, sir. But what people would generally miss out would be sale of securities, sir. Sale of securities is something that people would miss out. So most of the companies these days, considering how Nifty is going, have a investment portfolio, and they usually would sell mutual funds or some units of some funds. So it's something in the nature of security. So now 1% of the sale price of these securities constitute as exempt income. So that is something that one can declare. And those statements of what you have sold during the years are readily available on whatever demat account that you are having. So that is something that one can report.
Thank you, Saurabh, for adding value. Now I'm requesting Shankarji, please let us know what will be the financial impact of the appeals or the litigation which is already going for earlier financial years, and how to deal with in the year-end transactions, how to report this, or what type of things we should do in our books of accounts.
That is the key area that I think all the chartered accountants will have a impact, or they will have to look in before they sign their accounts for the clients. Because the reason being, one, whether it is a contingent liability or whether it is a confirmed liability, that needs to be ascertained. And especially with almost 2 years related due dates fell within this financial year. For example, under section 73, the last date for passing an order for 2017-18 got over on 31st of December 2023. And for 18-19, it has got a mild extension up to 30th of April 2024. So there would be scenarios where the notices would have culminated into orders, and those orders, unless it is taken into an appellate forum or into the courts, the way that has been dealt with by the taxpayer should also form part of the disclosures. Now, there will be some liabilities which they would have accepted, which must be provisioned in the books of accounts. And for that, they may have to make the payments as well, or at least make the provisions and make the payments at the appropriate times. Because what happens is, in one order, there are about 17 or 18 instances or 18 issues that are raised. 3 of it might be of high value, for which we are not agreeing. We are trying to take it to a writ court. But the remaining 13 or 14 loses sight because those are genuine liabilities. Now, that needs to be recognized in the books of accounts along with interest. And if any penalty is applicable, depending upon 73 or 74. And the other reason that this needs to be reevaluated is multiple registrations across the country. And only now, especially after the November instruction that is given to the CBIC, given by the CBIC to the CGST officials, we are seeing that these the DRC 01s, which is the summary to the show cause notice, or DRC 07, which is the summary to the orders, are getting uploaded in the GST portal. Earlier, the chartered accountants, we had a limitation in terms of only seeking the assessee as to what are all the things that are pending for you in this state, what are all the notices that are pending, what are all the orders that have been passed, which is in appeal. But at least now in this financial year, it has reached a point where we can try to take it from the portal, but there are still some lagging that is there in some of the states or some of the particular states only from CGST departments. That needs to be taken. But by and large, it has improved. So this will play a critical role in identifying the contingent liabilities, the GST orders which are under appeal, and as well as ascertaining the liabilities in those orders which they have accepted, ensuring that it is paid or the provision is being made. And of course, the pre-deposit will also come into picture, the accounting of the same and how the same has been done in the books of accounts. So these critical aspects will spring out from the litigative parts. And if it is going to be a listed company, the moment that we see a huge show cause notice or a huge order that is being given against them needs to be reported to the highest level possible. Now, those are the things which get even reported in the newspapers. So care has to be taken to ensure that these are appropriately reported for a CARO purposes as well. So that is what I would say the litigations and the existing notices will have a role to play with respect to the disclosures.
Thank you, Sangaji. Subham, I think you have unmuted yourself. You wish to add something?
So just one thing which I usually follow, I follow three principles when it comes to reporting. When there is a probable outflow, that there's a good chance that I would have an outflow in that books of accounts, I would report it as a provision. When I feel that there's a possible outflow, which there may be a 50% chance, I would report it as contingent liability. When I feel that there is a less chance of outflow happening or a remote possibility of outflow happening, I don't report it at all. So just a simple disclosure requirement, which I usually follow, just wanted to bring to the attention.
But Subham, you have to report it under any circumstances. If not creating liability under contingent liability, it should come. How much sure you about winning the case, that is the different thing. But as the auditor, it must be reported as a contingent liability. I think Saurabh and Shankar both agree to me on this. We cannot ignore this. Not advisable as an auditor. Maybe a GST consultant, it is your view, but as an auditor, it should not be done like this. Because auditor must be little suspected or doing his duty. Now, Shubham, I received one question. I want you to answer, or anybody want to answer. Sir, what is procedure to be followed? We have sold the furniture after using 3 years, and depreciation was claimed on that furniture. And what will be how to calculate the sale value and all this? So you wish to answer this? Mr. A. Venkatson from Chennai is asking this.
Assuming we have claimed ITC on this, in that case, we'll have to calculate the amount of ITC which has been taken. We'll have to depreciate the value on straight line method at 5% per quarter. So assuming 3 years have passed, that means 12 quarters have passed. That means 60% is the value which has been depreciated. Assuming ITC was 10,000 on that, now 6,000 is already gone out of it. So right now 4,000 is the value which is remaining in terms of the taxation element. And whatever is the transaction value, actual transaction value, if the fixed asset has been sold at a particular value, if the value is more than 5,000, we pay taxes at more than 5,000. In that case, we pay the taxes at, let's say, 5,000 is the taxation element which is involved. In that case, we pay at 5,000. If, let's say, the transaction value, the tax amount is arising at only 3,000 rupees, then we pay higher of 3,000 versus 4,000, we pay 4,000. It's a very simple thing.
Very simple, very simple way you have explained, but you should also explain if ITC is not taken on this, then what will be the scenario? Because you presume that your answer is ITC is taken.
Yeah. So
because the person who is asking the question is silent on the ITC. He is talking about the depreciation only has been claimed by them.
So if ITC has not been taken, in that case, the transaction value, whichever has been disclosed in the books of accounts, the sale value would be considered. There is no question of depreciating from the ITC standpoint of view. And assuming it has been scrapped off also without any value realization, we'll take that possibility also into account. And no ITC has been taken, then obviously there would be no reversal also involved.
Thank you. I think Subham and Sankarji also agreed. Next question. Business assets, I think you have covered this, but still let me read out the question. business assets acquired during bad period before GST introduction, but the said assets sold during the 23-24, whether sale of business assets is taxable even though ITC has not been claimed under the GST law. I think it is specifically answered by Subham, and both the other panelists are fully agree to the answer, and me too. And Vice Chairman is also nodding head. So it is fully done. Now I'm going to Saurabh Singhal asking you the HSN code or the SSC code, goods or services need to be updated in the GST certificate. Because what we see that once the GST registration has been taken, people hardly go for amendments and adding of the new supplies or the deleting the old supplies. So what is your take on this? Because as if you go by law, they say within 30 days you have to do the amendment. You should apply for the amendment if anything is changing in your GST. REG 6, anything means anything. Anything includes everything. That is the even the telephone number or email address or the name of director, authorized signatory, additional place of business closed, additional place of business opened. So, Saurabh, please elaborate on this a little bit.
So basically, sir, mentioning the HSN and the description of goods or services that a person deals in the GST registration is an optional field, sir. First of all, optional, and that too with restricted availability of number of goods and services that you can disclose. Suppose I am a departmental store owner and I want to disclose my 500 items, I cannot disclose. I suppose when we were at GST and I suppose the limit was 5, today it is 25 or 5, I don't remember. But that time the limit was 5, sir. So first thing is that the legal provision which requires me to update for any amendment doesn't apply here because it's an optional field, sir. And that too with restricted number of items that I can disclose. The practical approach to this is, sir, what is happening is that these days, what we are at least here in the north seeing that officers are taking my GSTR 2A because they don't have my purchase register. They would take my 2A, and from the 2A they will take a vendor, do a search taxpayer of the vendor, and then see that this person is engaged in hotel services or this person is engaged in works contract services. It may be so that this person has given me repair and maintenance services or something else. But since his registration has a HSN as a description of works contract or maybe hotel services, they will assume, because GSTR 2A would not give us HSN because we don't report HSN invoice level. So they would assume that this is an ineligible ITC to me and give me a long show cause notice. And once they give me a long and a hefty show cause notice, I am at the receiving end and in a back foot position, considering the amount involved and the discretion available with the officer involved at the assessment stage, sir. Though the show cause notice may be grossly incorrect, but since the amount is high, I am at a back foot stage. So that is why.
Sir, 1 minute, just a moment.
Sir.
What is the specific reason of the show cause notice? Can you just highlight that? The specific reason.
So the reason is that what they have done is, in one of the pointers in the show cause notice, they say these are the 5 vendors from which are appearing in your 2A. We assume that you have taken ITC from these vendors, and these vendors are registered for works contract, which is not eligible as ITC, so therefore ineligible, and therefore a demand of 5 lakh rupees. Not considering and not taking into consideration whether I have availed ITC or otherwise, or whether that person has given me that service or otherwise. So that is where a vendor updation is, or vendor HSN updation becomes relevant, because you can't chase the officer. You can only take corrective action at your end. You can't take a corrective action at the officer's end. Another updation that is required, sir, is that, or maybe a vendor master updation is that many a times what happens is that, suppose we are making supplies to my customer in Meerut, correct? Maybe Uttar Pradesh, Meerut. Meerut is in Uttar Pradesh, sir. So now when I make a supply, I make a supply to the address that he had given me in 2017 when I registered him as a customer. Now this person has amended his registration may be from gully number 4 of or street number 4 of Meerut to street number 5 of Meerut. And my invoice is showing street number 4 of Meerut. And now the mobile squad officer specifically active in the state of Uttar Pradesh and Karnataka, sir, these people would stop my vehicle and says, you are going to the wrong address. See the registration. This guy is not registered at this address. So therefore, you are making some supplies which you will ultimately not declare. Your vendor, your buyer will not declare, and therefore we stop you and we put you to a penalty of 200% of the tax amount involved. So another thing that is to be done is that we have to update our master database in terms of vendor address, sir. It may be a slight change, it may be a change of a kilometer or so, but one has to do that because the officers would not agree at the time when they will stop my vehicle while the vehicle is going on from maybe Delhi to Uttar Pradesh or wherever, sir. So that is another point that I wanted to highlight, that HSN updation by the vendors and our master database updation of our customers is very, very relevant, sir. Sir, so that's all from my side.
So, Saurabh, any other point related to something about this precaution to be taken at the end? I
I'm
personally believe that since we are not taking care of our certificate on regular basis, at the end at least we must check it and do the necessary things, whatever is required, because Saurabh has correctly mentioned that there may be a long repercussion to this, even though you have shifted to in the same lane or the same place, long distance. Anything Sankarji or Shubhamji want to add about the registration certificate?
No, sir.
Shubham, I want to ask you at this point that 26 AS is always was a challenge in service tax regime. Whenever we used to receive notices, the officer used to refer, and I believe that the time is not far away when similar type of notices will come, at least for some provider, the person who is supplying the services. In goods, it is not so impacted, but in services, it will be. So what precaution and how it can be reconciled? Anything, any suggestion for you from your side?
So fortunately, a bit of reconciliation, we are already doing it when we are fighting GST 9C these days, which was not there under service tax regime. So there are reasons for differences for which relevant reasons should be recorded with us, because we need to remember income tax is a tax on turnover. But GST is a tax on supply. So these two terms cannot be always correlated. There can be multiple reasons for differences because there are advances received, or there are accrued incomes for which bills have not been raised, or there may be foreign exchange differences. A number of reasons for differences might be there. And sir, just to bring to everyone's notice, I am already seeing a few notices under GST only, where we are seeing that the reconciliation differences have caused a difference from the GST portal between with 26 AS. So those notices I perhaps would be seeing under the GST regime very soon. I mean, this would be like service tax regime. It was issued on a mass scale. We don't know when this would arise under GST, but I think once we do the GST and 9C reconciliation properly, that would be the adequate time for us to always reconcile with our 26 AS also. Because not all 26 AS, by 26 AS, I also mean to include the income tax returns, because there are quite a few incomes on which TDS is also not deducted. So we have to have a proper reconciliation between the income tax and GST returns. And I'm also already hearing that income tax department is also getting similar sort of maybe information from the GST portal, that if any income or any supply has been disclosed under GST, but for which income has not been shown under income tax return, they would be doing a similar sort of exercise. So perhaps it is high time when both income tax and GST portals should go hand in hand, and both the portals should have the value reflected in terms that it can be very easily reconciled. So these two things have to now be ensured that they are in line with each other. So this is something which I wanted to highlight, sir.
Any suggestion how to reconcile at the end, and what point of time we should reconcile, because 26 AS is getting updated little late. It is not the document which is available readily available to us before 20th of April. So at what point of time, what type of reconciliation we should do? Any suggestion on this?
So 31st May would be the ideal time when we see that the 26 days of quarter 4 gets updated.
Correct.
So at that time, we may have a list of all the parties to whom, let's say, the TDS has been deducted. So we have a reconciliation of the parties on which the GST turnover should have been shown. So for instance, for professional services, we having 194J. So we know that if the income is arising under 194J, ideally I should be reconciling only the sections which are arising over there. 194I is for interest, it may not be that relevant to me. So based on the nature of income, I should be identifying my HSN code under the GST regime, whether that HSN code income which I am shown under GST vis-a-vis the income which is coming as per my income tax return under the relevant section and in the relevant period, whether those are in line with each other. And we should do this before we finalize our financial statements and after the 26 years gets updated after 31st May. So that is the right window to do this reconciliation.
Thank you. Yeah, Sankarji, please.
Yes, sir. One more point that actually Shubham also touched upon, the reverse working. For example, under section 74, there is any turnover that has been missed should also sharing on the reverse basis is also happening. Eventually, the income tax also picks up saying so much of turnover you have disclosed for the purpose of GST, which was not there in your P&L of that respective year. So from that perspective also, one is 26 AS. Of course, the 26 AS related reconciliation will be more relevant for service providers. The goods related people also will have to look at this P&L reconciliation, and any additional disclosures made subsequently should also be done in the other part. That is, if it is done in income tax, should be made in GST. If it is done in GST, should be reflected in income tax.
Thank you, Sankarji. Since you are talking about the liability to be discharged, now question coming whether we should discharge it through DRC 03 or GSTR 3B. What will be the correct choice? And there may be a situation where the one is not correct, one is correct. Please elaborate on this.
Sir, legally, both are allowed. So that way, I'm not getting into the correctness of it. I will talk about the appropriateness. Because in terms of legal provision, section 39(9) allows me to do the adjustments in the subsequent 3B, supported by circular 26 also. So I don't have a problem there disclosing it in 3B. But whether if I disclose it in the subsequent 3B, will I be able to maintain or will I be able to demonstrate to an officer at a later point of time is what is the key consideration which will decide my appropriateness. If it is with respect to my outward liability, I would suggest we can go ahead and disclose it in the subsequent year, GSTR 1 and 3B also with the respective dates of the previous year if it is going to be B2B, and give that reconciliation in our GSTR 9 and report it in GSTR 9C. Whereas when it comes to ITC reversals, the permanent reversals or identified reversals under 42, 43 and those things, with so much of data getting cluttered into our GSTR 3B monthly reversals, 4B1, 4B2, my suggestion would be if it is a reversal pertaining to the earlier year, now we want to hit the electronic credit ledger, reduce my ITC by reversing it. My suggestion would be to adopt DRC 03. Now there, even at a later point of time during audit or any kind of action taken by the department, I can clearly evidence it with this one DRC 03. This is specifically done for this purpose. Had I done it within that financial year, yes, of course, my 3B will be my supporting document. If I am doing it subsequent to that financial year, such kind of ITC reversals, my suggestion would be to use a DRC 03. And I am reiterating, doing it in 3B is not something against the law. We can do it. But doing it in DRC 03 will be easily demonstrable to the officer with respect to this ITC related aspects. When it comes to output related aspects, you can do it in GSTR 3B. That is the view that I hold.
Thank you, Sankarji. Subham and Saurabh, you want to supplement something here?
So
because it's very difficult with them. Always the SSCs come
Always.
and ask what I should do, DRC 03 or 3B. You must be coming across this type of queries whenever you are speaking in any seminar or any workshop.
Sir.
Assessee is spoiled for choices, sir. That is why
Anything you
about
want to
being
add,
vegan.
or we should fully agree with that?
Sir, I just wanted to say that, Shomji, you were saying something, sorry.
No, I completely agree with you.
Sir.
I mean, you can start, yeah, please.
Sir, so anywhere, so the decision between DRC 03 or a 1 and 3B is that if you want to pass on the ITC, you do a 1 and 3B. Else, you do a 3, because even when you file a DRC 03 in 23-24 for a 22-23 liability, you can choose the relevant year, and when you go to the online portal and see GSTR1 versus 3B versus liabilities arising by the order, then it also compares it with DRC 03 filed for the relevant period. So your portal has a better optics in those terms when you do DRC 03. It is only when you want to also pass on the ITC to the recipient, or you want to take a ITC of the RCM that you may have deposited on account of an order, that you should do a 1 and 3B. Other than that, the simple answer is, if no ITC to the recipient or yourself, then just do a DRC 03, choose the relevant year to which it relates, so that when anybody checks your portal in returns, compare tax and liabilities, the optics are just fine, sir. And it is all about optics. It is only optics that is triggering notices, sir.
Thank you, Saurabhji. One of the viewer asking that, I think it was answered, still I want to read out the question. Sir, my client contractor sold truck during the financial year 23-24 and was purchased prior to GST applicable. I think it is answered by Subham correctly that you have to pay GST on the sale value. Since GST credit has not been taken, there is no impact. But one question which I want each of the panelists to be answered, that is ITC available in GSTR 2B, since the purchase has been made in the month of March, but goods has been delivered for April. I have purchased certain goods, invoices coming in my GSTR 2B in the month of March, but goods reached to me on 12th of April. Can ITC be claimed in the month of March as goods received before claiming ITC? The suggestion, the ground which is suggested by this particular person is that since I have received the goods before I am taking the credit, so can I take it in the month of March?
Three filters need to be analyzed here, sir. One, it has to be eligible under section 16. Then it has to be not blocked under 17, and then matching. Mere matching cannot give me the credit. But at the same time, there are contracts wherein the sale can be X my works or X your works. For instance, my supplier says it is X my works. He is in Billai. I'm going to bring the goods from there to Chennai. So he is going to dispatch it on 29th of March, raising an invoice. I am going to send the transporter who is acting on my behalf. And these goods are delivered to my transporter. The moment it is given to my transporter, it is as good as mine.
Delivery.
Because he is acting. If the underlying contract states that it is sale at your
Shankar Narayanan will not be eligible for credit, because if the delivery you have taken in Billai, then the person should charge CGST, SGST and not IGST.
No, sir.
How then can I take credit?
Sir, I want to differ on that, sir. Section 10(1)(b), 10(1)(c), sir, it says that the transportation can be by the supplier, recipient, or any other person. He can charge.
Okay, now I will ask you this question, because this is very. I have been strong votary of this subject.
Sir.
Now just tell me this. Assume that the goods are lost. The goods are destroyed. Accident happens.
Sir.
Okay. Can the buyer take a plea saying that, look, I have not received the goods, I am not going to make a payment to you? See, don't talk as a lawyer. Never don't talk as a lawyer.
No,
Let's talk as accountant. Accountant.
Yes, sir. No. So the risk and reward. So suppose I'll tell you, sir. I went to.
No. Wait. Please don't ask me a cross question. Don't ask.
No. I'm not asking a cross question, sir. I'm only answering by example, sir. Suppose I went to Calcutta And in Kolkata, I went to a Chroma store, and first of all, they were not willing to issue me a IGST invoice. I told them I am from Delhi, please issue me, and this is the section. And then he spoke to some senior manager of his, and he issued me a IGST invoice. And it so happened that it was a mobile car holder, and when I came back in the midst of the flight, I broke it and it got destroyed. So it is my property, sir. Risk and reward has happened. I have to pay. I have paid.
So that he might have issued an IGST invoice, which itself is wrong per se. Because where the risk and reward is transferred, it assumes significant that the consumption has taken place.
Sir.
And GST is a consumption tax.
The consumption will happen here, sir. I will put that car holder in my car in Delhi, sir.
No. In fact, if you go to the precedents of the central excise era, okay, precedents, and even the sales tax also, in the sales tax era also, of which I have been a practitioner for quite some time.
Sir.
When the risk and reward is transferred to a person in a particular place,
sir,
there ends the job of the seller.
Sir.
Let us agree to disagree. I
agree to disagree, but again, sir, CST Act Section 3A, sir. If the sale occasions the movement of goods from Kolkata to Delhi, that sale is an interstate sale. The sale occasions the movement, sir.
What Shankar Narayan told was, I have taken delivery, that's all. He says, it's your, that's it. I will not charge. Because see, I have seen notices being issued on this count.
Yes, notices are issued, sir.
Have been issued, place of supply is a determining factor. Okay. So the moot question again, we go back is very simple. On 31st March, invoice is there. 12th only goods come. Should credit be taken, not taken? That is what is a moot question which our Honorable Chairman has asked.
Sir.
So that Shankaran was trying to explain, you are trying to explain, and Shubham is maintaining a stoic silence. Sir.
I have a slightly different point which I wanted to highlight. I just wanted you to complete the major point which you were discussing, but I would like to bring back to the moot question, sir. I have a slightly different take on it. I mean, this is something which can be a food for thought. The section 16 has all the conditions which are prescribed under law. One is invoice should be there. I should have received the goods and services. Tax should be paid to the government. Return should have been filed, and it should be appearing in 2A. Fair enough. So third condition, which is tax should be paid to the government, is not fulfilled when I'm taking the credit. So the question comes in, when it comes to receipt of goods or services, whether that condition should be fulfilled at the time of taking the credit. In my view, the conditions which are prescribed in section 16 are to be eventually fulfilled, because the tax would be paid to the government in 3B by the supplier by 20th, and I am filing my return on 18th. If I am taking the credit on 18th, can there be a view that the goods and services are to be eventually received, and it is going to be received? So that's why the ITC should be eligible to me. If I have not received the goods or services, ITC would be denied. Similarly, if tax is not paid, the ITC would be denied. So I would place 16, 2B and C on similar lines, and maybe there can be a comparative drawn from it. Sir. That's all.
Sir.
Now, okay, you complete, then I'll give my final.
Sir, I would. So, Shubham sir has
Sir, I think
we are exceeding time. We are exceeding time now. It's already
yes, sir. This is the problem with me.
Sir, actually, section 16 is a parasite, sir. It will take all your minutes, sir.
So we all agree to disagree.
One minute.
Yes, sir.
Only 1 minute,
Please,
Chairman. Only 1 minute, Chairman. Only 1 minute. In fact, what I would like to submit here, sir, not going by an accountant's view, not going by the lawyer's view, as a common man, I will say GST is a consumption-based tax. Once I consume the goods only, I am eligible for any credit. Here I am not consumed. Goods have not come into my hand. Invoice would have come. Whatever goods has not come to me. As a common man, as a person who taking a conservative approach, as an accountant of the company, I will say, no, sir, goods have not come. I will not take. Keep this credit in your balance sheet. We will take it in the month of May. Of course, in April, when we file the return for the month of May. That is my simple take. Of course, we will not extend the conversation because it's already 8 and Chairman has been kind to allow 5 minutes extra. Over to you, Chairman, sir.
Sir, but the conservative view is that the goods are not received by me in the factory. It is not safe for me to take the credit, although arguments are there that if it is received by my agent, whether it will be considered as a delivery to me. It is always a dispute point, and we keep on disputing this point, no doubt on this. So before I request, thank you, I want to offer thanks from my side, but a formal thanks will come from the Vice Chairman, sir, to all the panelists for a wonderful, lively discussion. I must use the word for this today's discussion. Before that, let me inform all our viewers that a residential course on the demand and appeal mechanism has been announced by the GST committee. I don't know how many seats are left, but because the capacity is 50 only, and I request any of you person are interested, please do register for it. It is definitely a wonderful learning, and it is being organized at the Center of Excellence of ICI at Hyderabad with the residential accommodation in the COE itself. So those who have not registered, you please register and be there, and I will definitely be there to meet all of you who is coming. And second, next week we want to organize the similar webcast where we will, the same format of the panel discussion we are going to do. So viewers may write their topics. Definitely we will, in 1 or 2 days, we will decide. If some viewer want a specific topic, they may do write on the chat box, which is they are using for raising the queries. They may raise it. Over to Vice Chairman for formal vote of thanks.
Thank you, Chairman sir. It has been a very engrossed session for the last 2 hours and maybe 10 minutes now. I sincerely thank you for introducing this idea of having panel discussions where certain views are debated, discussed, and maybe more than one view come out. And sometimes we agree to disagree also. That gives a food for thought for our mind. I should sincerely thank you, basically, in the outset, first immediately for taking us through all these webinars that we are conducting now, and maybe in future, and also in future. Shankar Narayanan, Saurabh, and Shubham, sincere thanks to three of you for sparing your valuable professional time. In fact, I must say that it has been a very interesting session, I should say. And of course, there can never be a single view on tax. If there is a single view on tax, then it is not a tax.
So then what will we do?
What will do exactly? And especially consumption tax and being dynamic in nature. And in a vast country like India, where place of supply does matter, I think we have been having a good time for the last 2 hours, and our 600 of our participants who are there here, they certainly would have taken home a lot of benefits. So I request all the participants who are still there, sincere thanks to each and every one of you, and also request you that you be with us at all the webinars and webcasts we are going to organize. Interesting sessions, interesting speakers, and interesting learning also. And as Chairman has said, we are organizing this litigation management course at our own residential facility in Hyderabad. In fact, only 2 to 3 seats are left. Chairman sir just got an update. Only hardly 2 to 3 seats are left. So kindly join at the earliest. Maybe we'll certainly do it again sometime in June or July. This course, and it's since it's a residential course, a lot of views will come out there. Sincere thanks to all of you, and to our office also. It is there, Sanjay is there, and also to Ashok who was there. Thank you so much. Thank you. Good night. Good night to all of you.
Thank you, sir. Thank you,
Thank
sir.
you so much, sir.
all.
Thank you. Thanks a lot.
Thank you, everyone. Ashokji, we can sign off for the day. Ashokji?
Recording stopped.
Thank you, sir.